Hello again, it's Darren from Investor Income. We'll be looking at buying the dip with stocks and the benefits this can have in our long-term portfolios, or if we're looking just to swing trade or day trade. I'm going to show you again my style. You can see that over previous videos and give hopefully a bit more information on exactly how I manage it. And we'll be looking at buying those dips to get the absolute best price we can and make a lot of. So here we're going to take a look at Caterpillar. Big industrial favourite. It's not actually one of my favourite stocks. Caterpillar is a huge company, massive capitalisation, very solid dividend growth. The stock does move around a bit, especially the last couple of years, as you're going to be seeing it shortly. And it offers us opportunities. It won't just be this stock. I'll be trading numerous stocks, but not necessarily every day. This is just one. Excuse me. This is just one that I've traded recently. I'm going to show you my entry points and how I've traded it. It is volatile in the sense that it is going to be vulnerable to crashes, market crashes and slowdowns, as we're all expecting at the minute. So we've got to be smart the way we trade this. But at the same token, there are opportunities. So I'm going to go across the charts in a second. I just want to show you the brand. This is a well-known brand. Pretty much everyone has heard of Caterpillar. Well, I say that most people that trade stocks will have heard of Caterpillar. It is a lovely large company, healthy dividend growth. It manages an 11% growth a year, and dividends I think around 2.7% at the minute. So it's a solid stock for the long term, and it obviously is in the construction industry and in multiple sectors actually. So there's a lovely website, highly interesting if you like trucks and mountains. Anyway, over to the charts and we will take a closer look. So here we are again. We're on Caterpillar's stock chart here. You can see we're on the 1 day. Please do look at my previous videos. And also if you could like and subscribe and all the good stuff on my channel to help me grow. If you find this content interesting, if you don't, feel free to ignore me and close the video. However, I do hope you will find it interesting and you'll get some value out of it. So here we've got the Caterpillar 1 day chart, which is the only chart I trade on stocks. Don't ask me why I don't trade shorter time frames and things. It's just the way I've found is the best and most profitable for me. So, and it also is the least stressful, and hopefully in the course of my videos you'll see that. So here we go. These are the positions I've got into on this stock. And this is going back to October. You see at the bottom, 24th of October. And you will see the reasons why I've got into these stocks. However, I've got some indicators which I do use, which are custom indicators. I don't pay for them. I've just honed them over the years, and they work very well for me. But they are my, obviously, my edge on the market. However, it's not, you'll see quite easily that anyone could enter these markets and make money. And it just helps me hone down my interest slightly. But so here, how would you know where to enter? A lot of people draw trend lines along the tops down here. I don't do that. It's not the way I work. But you'll see if we just put, this is a whole moving average of 3,000. You'll see it's my favourite indicator. If we just put this one on, it'll take a while to calculate. So automatically it changes the chart. So from what would look to be a complete downtrend when we first looked at it, we can now see that over the last 3,000 days of the whole moving average, we can see that it's been an uptrend and it's leveling off. So what I'll then do is I will pull out my chart like this. Okay, so now we always go on a wide chart just so we can see generally where the stock's going. So we can see it's a massive exponential rise in 2016, 2018, pretty much 2 years. And then we've just gently come down. And when we're looking to buy the dips, so if we look in here in this period, if we're looking to buy the dips, now I'm going to just turn on the RSI, which is a favourite indicator, not mine at all. I'm not a great fan of it, but you can see it will offer you very little in the way of opportunities to get into this stock in those 2 years. My indicators will give me a couple of entries into this, and when you've got an exponential rise like this, and we're above this indicator, for the way I trade, this would not be the perfect stock for me to invest in. I was just trading in other shares and stocks at that time. So we will see. How do you buy the dip then? So to buy the dip, you need to get a reason to trade. Okay, so if you just look at the RSI at the bottom, you can see it's gone to the bottom here. So if you're just trading off the RSI and looking for a quick return, you could buy those dips there, the double bottom there. Okay, so you could get into this trade here just by using the RSI. You can then start to look at how the RSI changes and goes up, but the price still comes down. It's called divergence, so you can trade on those ones as well. You can see a turnaround. Now, I'm a technical trader, but I look quite a lot of the fundamentals of companies, so I only get into solid, large, capitalized, profitable companies, and I trade half my position normally, depending on what stock. This one I wouldn't, just because I don't particularly like the stock for long term. It's in a fairly solid industry. I just find it a bit too rich for my taking at the minute. I'd want it to come down a bit further personally, but I have traded it. And these are the lines where I've traded it, the dips. Now these were my indicators were saying to buy. Now this one you can see is duplicated on the RSI, so my indicators are giving exactly the same signal here as the RSI is giving, so you could take that trade there, no problem. Now what I look for when I buy the dip, I look for, if you look at this percent, we're about 115 approximately. Let's go from the bottom if you had a really good day. Let's say we're at 113 level. You take that up. You can see on the right hand side here, this recovers extremely quickly and comes flying back up. Okay, so I'll be looking for taking at least 5% from a trade, and then if I'm holding dividend stocks, that would just compound my gains for the dividend as well. So if we're looking at a 2.7% dividend and I make 5% on my position, then you can see already I'm faring quite nicely. So that's just the way I trade. I sometimes trade the whole position. I just keep a record of each stock, and hopefully through the course of my videos you'll see that in more detail. So if we're buying the dip and we're looking at these low areas on the RSI, you can just trade the stocks off those. But what you've got to bear in mind is we're not looking for 50% gains when we're trading this way. Okay, the greed is an absolute killer. What you want to do is you want to compound small gains. And my fallback position is that I'm in the best quality stocks at the best time, as in a dip when the price has come down. So I'm getting that stock at a cheaper price than it has been. And that way I give myself that extra little bit of margin. So I'll take a small gain, anything from 1 to 10%. 10% is obviously doing very well, but that's the kind of area I look to trade in, and my indicators will tell me generally when to get out. I might just get out because I don't like how the stock's trading. I've done that several times. Often I've held stocks. You can see in my previous video I've held stocks of ones I actually like. So you got to actually like the asset you're buying as well. That's something I believe in. Caterpillar for me just doesn't float my boat in that sense. So it's just not something I'll be looking to trade and hold at the minute. If it comes down further, so I'll just zoom out here and you'll see. I'm just going to put on the 3000 exponential moving average here and you'll see a bit more detail. And we got here, you see we've got the channel between these two lines, and it's come down into here, which is obviously why I've traded these. Now I should have, in hindsight, held those positions, however I didn't, and I came out completely. So that's because I didn't really like the way it was going down, and hindsight's a marvellous thing, but I don't particularly like the stock at that price. I really wanted it to come down to the 100 level, which is where I'll be entering again if it comes down that way, for the long term that is. Now here you can see the RSI again at the bottom is oversold, so there's no reason why you couldn't have taken these trades as well. And you can see you can get out when the RSI again goes up high. So when you've got a pattern like this, it works quite nicely. When you've got this kind of exponential rise, it's more limited because you are in extremely overbought areas, but with stocks and the markets the way they've been, you can see an exponential rise like this. Like I say, I got a couple more opportunities with my indicator, but there was really only kind of one interesting move there. But hindsight again is a marvellous thing. The markets have actually got a lot easier for me the way I trade in here, so we can see where we're at the top here. So we're expecting this to come down to pretty much reach this level at the top as well here. You can see it's bounced 1, 2, 3. It's the 4th time it's hit that level. So we're expecting it to come down again to this sort of range around the 120s, I would say. We'll just have to see how it pans out. So buying the dip, it's very possible with simple indicators. We can see here that these, because the orange is above the blue line, this is a bullish market. This stock's been in a bullish market for an awful long time. So let's go back to 2013. I'm not sure whether it's going to actually load any more data or not on this one. Going back here, it's just a bit slow because obviously I've got two massive histories on here to go through 3000. So you can see here basically this is a bull market. Okay, so this is the 2008 crash where we've got to the tops again. And I look at the 2008 crash on a lot of stocks, and so here, even though they've got this massive correction, there's so much room for this to stay above. And when we've come down here, I mean, you can see how badly this stock was affected by the crash. But ultimately, unless it goes out of business, we're still in a bullish situation. It's not rolled over, it's not gone bearish, and this stock just keeps on going back. Okay, so you can see this isn't the case on other stocks, as you'll see in my other videos. If you go through, these lines will actually cross and go bearish on certain stocks. For this one, it's pretty much a buy the whole way through for its entire history. So, with recent history anyway. So it's an excellent one to trade long term. It has got value attached to it. I just don't like the price about where it is, especially I'm not going to ever buy when it's up here anyway. My indicators were telling me no way, and even the RSI tells you not to trade that now the way I trade. But you can see the range we're trading in there. We're going to be trading between the 120s and the 130s, that's a region, and making a lovely profit on that one. So that's the way you buy the dip. Just wait for it to come down like that. If you'd like me to give more information, or if you want more information, you can contact me on my email if you'd like to. I'm not selling anything. All I'm doing here is trying to help people out. I've invested thousands of hours in research stocks over the years, so that's basically the way we're going to end this video. So please get in contact with me, do like and subscribe. It's been fantastic weather today, and we will look forward to a new video very soon. Take care.